What's up, Alice? What's up, Cameron? Thank you guys so much for having me on. Really appreciate it.
Zach, sorry, so many things, dude. Listen, do you remember, man? This is the best way I can explain this to people listening. So I have a buddy who I used to work out with, and we used to work out every single day together. And clearly I'm not a small guy, but we stopped working out, and he kind of went and did his own thing. And next thing you know, this guy's like a model. I mean, he's a fitness model. I mean, he's everywhere. Like he just got interviewed on The Bachelor, okay, or The Bachelorette, and clearly no one's calling me to get interviewed on The Bachelorette.
That's
So
funny.
I must have an effect on people that whenever we hang out long enough, they go doing great things. Because next thing you know, Zach, we were you were working at a senior care facility. It wasn't that long ago, and now this dude is Mr. Phoenix. I mean, it is unbelievable, man, the growth that you guys have had in Phoenix, the amount of transactions and
It
multifamily.
was all after that intro call, Ellis. After that intro call, things just took off. I can't explain it, man. It's
I
crazy.
take complete credit,
It's all you. I'm
100%,
pretty
dude.
sure we have like tons of royalties we owe you. Like,
Yeah,
could you tell
it's
me how
something,
you're
man.
going to lay off me because it's coming?
So
Okay.
Zach, give our audience, dude, and I'm sure we've read your bio
Yeah.
at this point, but just a little bit about what you guys have been up to at Rise 48. You're the CEO of that, but what is Rise 48 and what are you guys doing? And even just talk about some of the success you've experienced recently.
Yeah. No, thanks, Ellis. Thanks, Cameron. Really appreciate it. So yeah, I mean, we are, value add multifamily operators here in Phoenix. So we're only focused on the Phoenix Metro multifamily. So, we're focused on 100 plus unit apartment buildings, buying them, renovating them, increasing the revenue, and then, selling them to achieve returns for our investor base. And so, since we started, I think we've acquired about 24 properties worth over 750 million, over 3,500 units across 5 different cities in the Phoenix Metro. And, we've been very blessed to be able to scale and can keep the momentum going. So on the equity company, we have, including the three co-founders, Bikram, Robert, and myself, we have 20 full-time salaried, full-time employees on the equity company, just focused on asset management, investor relations, accounting, et cetera. And then we also now are completely vertically integrated with our own property management company, Rise 48 Communities. So we have about 69 or 70 full-time employees on full benefits on the management company, which has been, really cool to give us more efficiencies and control where, all the staff on the assets is our staff. So all the managers, leasing associates, maintenance, and we don't do any third-party management. We only control our own assets. So that kind of gives you an idea. We've just been focused in this market, value add multifamily, and been doing that.
Wow. Incredible, man. Gosh, the Ellis effect is serious. Cameron, you need to hang around me more. Clearly,
Ellis, I know. I guess my time with
I'm
you.
gonna stop taking credit because I have no credit to take from what Zach has accomplished. It is absolutely amazing, dude. And I hope you take this right. Like, I'm proud, man, of you. I'm proud to see another brother in the Lord really
No, thank
accomplishing
you. I
massive
really
things
appreciate it.
and
That
having.
means a lot. Thank you. We've been blessed for sure.
So awesome, dude. Let me just do this, man. Let me pray for us as we always do in this show, and then I want to kick off with some good questions here. So Lord, thank you so much for this time. Thank you for Zach. Thank you for just the mission, vision, blessing you've given to him, and being able to see what he's created there in Phoenix. I pray that this conversation would be a blessing to those who are listening to see what's possible, to really have a vision and go after it, and know, Lord, that you're with us in all things. We pray this in Christ's name. Amen.
Yeah.
What would you say has been a turning point for you, right? From, hey, I'm trying to do some syndications, I'm in a competitive market, trying to figure out how to do this, to like a deal a month. Like, I get a freaking deal email from you guys once a month. Like, what has been
Yeah.
go back and tell me a turning point.
It's a good question, Alex. I mean, there's so many things that go into it, and there's so many people involved, right? There's so many, people who are constantly busting their butt, working really hard. Bikram, Robert, myself, and now we have so many staff members that just work so hard. But I'm trying to think. We had bought our first few deals. It was still tough, and I think, after we sold that first deal, I would say, that gave us a lot of liquidity so that we could go out there and redeploy earnest money. But I think it also gave us that first proof of concept, where we can go to investors and show, like, hey, look at this 36 unit property that we bought over a 21-month time period. We were able to execute our plan and achieve, X returns. And I think that helped a lot for attracting new investors. And as we're getting new investors, they're coming in We're doing monthly distributions. The properties are performing. And Bikram does all the reporting in his team, and they do a great job, institutional level reporting. And it's just been crazy honestly, even in the last 6 months, as we've started to sell more deals. We've sold 5 deals total. We have 5 more coming out to sell. And as we've been selling these deals, we're just getting a significant number of referrals, right? From investors who are happy, they're referring their friends, family, colleagues. And so it's kind of exponentially taken off. So, we didn't make any money the first 2.5 years doing this. And it was a real grind. You go through all the adversity, and we didn't start making money till last year, 2021, when we had enough revenue at the company level to support any type of payroll. We just got as we record this right now, it's February 2nd, 2022. As of March 2021, we didn't even have any employees. We hired our first employee in March, so it's been like 11 months, and now all of a sudden we have 90 employees. But I think, because we were able to build out the foundation, we were investing all our money back in the company. And now that we have revenue coming in, we can support infrastructure, payroll, so that we can scale responsibly. It's been a number of things, and we're always trying to focus on, what can we do to improve, because you don't want to be the guy that's just always trying to go out there and buy stuff. And it may look like that on the outside, right? These guys are overpaying, buying everything, but we're cranking so much volume on the acquisitions front. And we've hired so many people and spend probably at least 60 to 75% of our time during the week focused on operations. And Bikram and I are constantly in asset management meetings. And so it's just a combination of all these different people coming together to keep it growing and keep everything going well. But I think, the turning point, to answer your question, Ellis, is when you start selling these properties, because you start to prove out the concept. And we've learned, through that, by that time, we've gained some experience on executing the plans and all the challenges. And then you start to get a blueprint down, right? Where you can start to rinse and repeat, and you really start to then firsthand, you experience the economies of scale that everybody talks about, right? And the benefits of that.
Did you ever have a vision, man, for leading a company of 70? Like, was that your vision, to be the CEO of a larger company like this? Tell me kind of what you had dreamed about when you kind of got into this space and you were doing that first multifamily deal.
Good. Yeah, good. It's a good question. So when we first started, no, that was not my vision. You know what I mean? And I've always kind of had like abstract visions of wanting to, be a leader of a big team. And it's not because of the ego of the title or anything like that. It's really because I always liked being part of teams, right? Like I played high school football, I played Division II football. And so I always liked being part of a team. And even in healthcare, I was part of a marketing team. And it's always cool to be, competing against each other, but for the team. And so it's kind of funny, like I quit the job in January 2018, lived off savings for well over a year. About 18 to 20 months after that, we had purchased about 4 deals. Okay. So it was almost 2 years when I initially quit the job. We had like $35 million worth of deals, right? I wasn't making any money, because all the cash flow is going to investors. So I'm broke. I put all my money in the deals. I ran out of money, and we couldn't find deals. So I was like, I have nothing to do. I'm going crazy every day. You can only get on so many asset management phone calls before you're just bothering everybody and let them do their job. So I went back into hospice, and I went back into the industry in the fall of 2019.
I remember this call, dude. I remember this call.
Yeah. So I was broke. I had a non-compete with my previous company that had ended. Somebody reached out to me. So I went and I became the president and co-owner of this other hospice company while we still had the real estate portfolio. Because I was like, honestly, I have so much time. There's no reason I can't do this. So I had, a healthy 6-figure salary again. That really relieved me from the pressure. But my point in saying all that is when I became the president of that company, we had about 60 to 70 employees. And here I am at that time. I mean, I'm 30 now. I was like 28 at the time. And I'm like thrust into the president of 60 to 70 employees that are already at an existing company. And I'm probably younger than every single one of them. And that gave me a lot of experience, honestly. I was only there for 18 months, by the way. I worked there for 18 months. Then we got so busy at Rise 48. Bikram, Robert, and I were having 4 or 5 hour phone calls every single night, staying up till midnight, going over our stuff. And I got to the point where I was like, okay, we have to focus back on real estate. Now I'm going to quit again. And that's what I did. But, over those 18 months, we grew that hospice company significantly to 110 employees. Okay. So it really was valuable for me to get that experience of kind of being the figurehead, so to speak, and understanding how to represent myself professionally, knowing everybody's looking at you when you walk in the office and you're having, big all staff meetings. And I think that kind of primed me well for the growth that we saw in 2021, because I quit that job February of 2021. So 12 months ago, exactly, was my last month. After that, we had explosive growth in 2021. Okay. And that's where we kind of took off. We bought 16 deals last year, 560 million. So we spent the first few years not doing a whole lot. And then we hit this switch, and I call it a switch because in hindsight, that's what it looks like, but we just were able to stay focused. We got an office lease here for the real estate company. So every day we started hiring employees. And as we started getting busier and busier, we wanted to be proactively hiring people like 90 to 120 days in advance, because we don't want to ever get to the point where the staff that we have gets burnt out or they feel like overworked and we're not being efficient. So we keep trying to hire ahead of time. So anyways, that was kind of the natural progression. And I think that was good to give me that experience so that now we can, build out a big staff. And on the property management company, frankly, we've hired a president, vice president, senior regional directors who are very experienced in property management. Bikram, Robert, and I are not property management experts. We never wanted to be, and we never initially planned, but it became necessary and actually gave us an advantage operationally. And so we've hired executive leadership staff, paying them all six-figure salaries to run that management company. Wow. So we can focus on the equity company. So it's not like I'm out there managing 90 people. The majority of those people are on-site staff that are being managed by regionals, who are then being managed by executive leadership team at the property management company, who then report to Bikram, Robert, and I. So we've been able to build out, kind of a corporate structure, but still maintain the private, autonomous type of culture.
I got this from John Maxwell, The Three Laws of Leadership, right? Where he says, and he's right, where the cap of the organization is really to the lid of the leader. And so he talks about the belief lid, like what we believe we can do as a leader, and only those, your organization can only grow to what you believe you can accomplish. Same thing with leadership, same thing with organizational skills. Where do you excel at? Like, where were you strong, and where do you feel like in order to catch up or keep up with your organization, you've had to increase your lids, and how are you doing that? Because like you said, it's been fast, and in some ways, like, wow, all of a sudden you are the CEO of a 90-person organization. Where has that been like fit? Like, man, I just thrive because this is who I've always been. And what are the lids that you've had to really work on, and how are you working on those?
To answer your first part, I think that, one thing that I do a fairly decent job at is trying to see, like, I try to always be talking to everybody and kind of see, where are we not doing as well as we can? Where can we improve, or where is the potential pitfall coming up, and how can we address that now? Bikram and I, when we're, running operations, for example, we don't ever want to be penny pinchers, so to speak, right? We're going to pay better compensation, better benefits to get the right person. And we want them to be fully autonomous. We don't want to have to micromanage them, but we'll have that oversight. So I think, one thing that we've done a good job at is building out the infrastructure in advance. For example, last week, we hired 3 more people. We hired somebody in investor relations. We hired a financial analyst to help with our accounting team. And then we hired a transactions guy. And all 3 of those departments, the people that we have there, are fine right now. Okay. They're doing a good job, but we have these goals for 2022, which are to build even bigger than we did last year. And we know it's going to take at least 3 to 4 months to first put out the ad, interview the people. And we just hired them last week, which was the end of January. And we put those ads out like last week of December, first week of January. So we were interviewing all of January, and we finally picked the people and hired them. And now we know it's going to take, at least 2-3 months to get them trained and onboarded so they feel comfortable, so they're not being thrown at the fire. Right. And then we know, we're going to have a lot of deals closing around April, May, and they'll be, hopefully up to speed. And so we're trying to think ahead and continue to build that out ahead of time. And we had a meeting 2 weeks ago with our director of asset management, and we did her review, and we were just like, hey, you're doing a great job, but here's where we can improve, is like, you're getting too in the weeds on everything, and you're doing a great job, but in order for us all to advance, there has to be more delegation. So we need another one of you. And so we're going to build out this staff even more. You know what I mean? So those are the kind of things I think that, we've done a good job at. As far as the lid and things like that, I think for us to continue growing, you can't always just keep doing what you've been doing. For example, we've bought primarily 1980s, 1970s product the last few years. And what we're seeing now is, as you know this as well as anybody else in Phoenix, especially, but across the country, prices get more and more expensive, right? The basis keeps going up. And Bikram and I were just talking, like, we can't, it doesn't make sense for us to be buying 70s product, that has with a chiller at this high basis. And so going forward, we want to be focusing primarily on large 80s assets, 200 plus units. And then even we're going to start looking at 90s and early 2000s products. So I'm touring a couple 90s deals here in the next week with 2 different brokers that have value add. And so we're going to start to adapt to the market and pivot. And I think you always have to do that in any business, right? It's easy to keep doing what you've been doing. But when we're looking, especially at real estate with a changing economy, you have inflation soaring. Fortunately, real estate's doing really well, in part because of that. But we're trying to always see, okay, how can we adapt to the market? What's coming up next, and start. And honestly, part of starting this property management company, that was part of kind of increasing that lid that you speak of, Alice, because last year, going into 2021, we had no plans to start a property management company, right? We had said maybe down the road, maybe we will, but it's honestly, if we can use third party, that's great. We had a third party management company that was doing a great job the last couple of years. What started happening around summertime of 2021 was, because of these unemployment checks, there's a depleted labor pool, right? So there's a ton of turnover, and they couldn't find the right people. We had 4 different properties over a 5-month time period. We had our on-site managers turn over and leave somewhere else for more money. And the third party company, they just couldn't find people. So, fortunately, our asset management team was micromanaging the assets, and it didn't negatively impact the asset or the performance. But then it's taking away bandwidth from our asset management team, right? There's always a ripple effect. And because of these third party management companies' business model, their fee structure, they have very thin profit margins, right? If you want to make money, do not start a third party management company.
Yeah.
Right? Make money. And so they cannot compete and offer more compensation, more benefits. So the primary reason we started the property management company is we said, okay, we are going to offer the best compensation and the best healthcare benefits in the industry, so that we can not only recruit the best people, but retain the best people, so we stop having so much turnover. And so that's what we did. So we're offering the best compensation. And we've talked to a bunch of these, big institutional, even property management companies like Greystar, for example, and we're blowing all their benefits out of the water. So for example, we're covering 100% of the employees' healthcare benefits across both companies. So all 90 employees have 100% coverage, and all of their dependents have 50% coverage,
Wow.
Which is far more competitive than anybody else that as far as we know. And so our whole thing is like, we don't need to make money on the property management company, right? We just need it to break even, because it's to support the real estate company, which is our high profit margin business. And so if we can have a really good property management company that makes our assets perform well, that investors are getting good returns, they're happy. Okay. And for underwriting perspective, some people have asked, like, okay, well, doesn't that make your payroll go up? How do you make these deals pencil? The answer is yes, but we make up for it in other line items. So for example, before we were underwriting anywhere between 1,150 to 1,200 for payroll. Okay. And now we're about 1,400. And the difference is that on those pro forma budgets from our third party PM company, they had certain line items for turnover costs, maintenance, admin. Well, those were all getting blown. Okay. They were going way over that because we had so much turnover with staff and so many maintenance issues that weren't being, kept a close eye on. Those were not being hit. So we're actually reducing those other line items and becoming more efficient, even though our payroll line item is going up, because we have better staff, frankly, and more efficiencies. And so that kind of gives you an idea of what we've done to try to adapt and start the management company so we can continue to grow.
Zach, listening to your story is so encouraging to me, because I'm not going to get into it too much, but it is very, very similar to mine, as far as quitting your job, living on savings for a while, not making any money, being broke while something is being built and costing you a lot of money and a lot of time.
Yeah.
And I'm just stoked to see your success and how you've built what you've built. I'm very curious, because this is a question I get asked a lot too. When I tell my story to people, they're like, well, how are you making money?
Yeah.
Because, you got bills to pay.
Yeah.
Well, I was prudent and saved a lot, and my wife and I live well below our means and are just fine. But one thing I got asked, and I experienced and learned, and I think you might could shed some insight on too, is, doesn't your wife work it with you?
She does. Yeah. She's
Okay.
full-time in the company.
Awesome.
Yeah.
So what was the process like taking your spouse through that time of, hey, I believe in this business. I'm going to build it. By the way, I'm not going to have any income for the next 18 months. Our savings is going to start going down every month. And I believe in this. Are you on board? I'm sure she said yes. But what was that like, man? Just take me through the dichotomy of your home life with your wife in that season.
Yeah, no, it's a great question, Cameron. And I think it's also relevant to the kind of the overarching theme of this podcast, which is, how it impacted our faith and relationship with God as well. So at the time, when I quit the job, Grace and I had just been dating for like 4 or 5 months. Okay. So we weren't engaged. We were not married. Okay. So we had been dating, and, she was fully supportive, but we weren't married necessarily. And then, we started growing closer and closer, I think, through the adversity, because she was huge to help support me emotionally, psychologically. And then after the first 12 months or so, she was literally supporting us financially because I was broke. I put all my money in the deals. I remember I had about $12,000 of credit card debt. And then, she went and got she had a W-2 marketing job, and she was covering, our bills. So like, after we bought that first deal, I sold my house, which I had bought in 2015, because I had no money and I needed earnest money to buy a new deal. So I sold the house. I wired all that money non-refundable into a portfolio. And so then we were renting like a townhome for a year. And then Grace was paying the bills. She was paying the rent for the townhome. I know this
Oh
sounds,
my gosh.
I think I'm stupid and crazy, but that's what we did. So I was like, I need to unload this house. I need earnest money. So she was covering the bills for that. And it wasn't until I got that second hospice job as the president, I was able to kill my credit card debt. And then I actually paid off Grace's car because she had been paying all these bills for all this time. And then I basically repaid her. And so, but anyways, through that process, she was extremely supportive. We got engaged through that process. We got engaged in 2019. And then we got married after
Wait,
that.
your girlfriend was paying off all these bills?
No, she was my fiance when she was paying the bills. Okay, let the record show.
Dang,
We
dude,
were
that's
engaged.
still, man,
The
still.
bills were being paid by the fiance. All right. I did not have a girlfriend paying it. I was still paying it myself, but I was burning through savings, to your point,
Yeah,
Cameron.
right.
So it's a lot of adversity, as you guys know, because it's like you go from making a bunch of money and feeling safe and comfortable to waking up and you're like, okay, what do I do today? Oh, by the way, I just lost more money. You know what I mean? Because the bills hit and I have nothing coming in. So
Right.
yeah, it's tough. I think going through that adversity brought us closer together, and it also helped us grow in our faith immensely. And Grace was a big part of that, just because when you're, and again, this sounds dramatic, it's not like I was like facing depression or was like addicted to like drugs or anything, but you hit like a psychological or emotional rock bottom when you feel like you don't know what to do, you know what I mean? And you feel like you don't know what the next step is. And that's when I think you turn to Christ, and that gives you a lot of faith. And through that process, it also hardens you, right? Where it builds a lot of character. Now I almost feel like, not to be dramatic, but I almost feel like I have a chip on my shoulder. You know what I mean? And it's like, I'm not going to listen to what other people say. And it helps you overcome other challenges that you're going to come across because you went through all that adversity on the front end and you come out successful. And so that's kind of what that process was like, emotionally and mentally.
What I see and hear, and I think it's so important to note, and Cameron, you can continue after this, is that there's no such thing as an overnight success. And I just like can see Zach online, which I have, and I'm like, man, it feels like come out of nowhere, right? Especially from the last time I talked to you. But it's so good to rehear this. I'm like, dude, you put your house into your earnest money, like to go do the deal, like you sacrifice payment for 2 years. I'm like, that's the stuff, man, I think as entrepreneurs, people don't see of like, dude, we're crushing it now. But that's because I was getting crushed for 2 years,
right? Exactly.
And I remember that same story, man, where I'm laying on my carpet, like I'm so screwed. We're out of money in 2 months. What do I do? And it's the ability just to have faith and stick in there long enough. I think that is one of the keys to entrepreneurship, is just staying alive long enough for things to get rolling. Anyways,
that was actually my philosophy internally, Ellis. It was like, I was always like, just stay above water, just barely keep surviving. And my whole philosophy was, do not give in to the short-term pain to sacrifice like the long-term upside. That was like my internal thing, right? Always just stay above water, even if I have credit card debt, because you believe that you're going to get through it. And so, yeah, you can obviously attest to that too.
I believe God often leads us, his people, into places we would not normally choose for ourselves to give himself the opportunity to show up. And it's typically at the last moment, just God flexing. But I'm curious too. So, I mean, those feelings are also familiar for me, and I'm sure Ellis too. There's a quote I really like. It says, God is in control, but he doesn't expect you to lean on a shovel and pray for a hole. And in
Yeah.
my, when I was getting the business going, all that process into where I am now, the biggest thing God showed me was like God calls us to faithfully work really hard and diligently and to be prudent in all of our decisions. And he will bless that. Maybe not always in the ways we hope, anticipate, or really want, but he will indeed. And I'm curious, you guys are crushing it right now. And I'm sure sometimes it feels like there's a million more decisions to make and burdens and obstacles to overcome. But I'm just curious the insight that you've gained from the Lord, or that real scary, real frustrating, probably real slow time in your life, having the girlfriend, being broke, selling your home you probably don't want to sell, taking big risk. Like what, looking back, what is evident that you saw God doing in you and in your life and your faith in him?
It's funny you say that too, because I was just thinking of this like a week or two, because I mean, even though now on the outside, on LinkedIn and all this, BS social media, it looks like we're super successful and just cranking it. I still get scared all the time and get nervous, because as you're constantly trying to push it, you're always pushing the comfort zone, and there's more responsibility, more stress that comes up. And, there's always conflict. You know what I mean? I could tell a bunch of different stories where you have to really get into it, or you have tough conversations with lenders or brokers, or you're in tough positions and no one's going to bail you out. Either I do it or it doesn't happen. And it's going to impact a lot of other people at the company, my decision and my taking the action or not taking the action. And so I think, what I learned through that process is, no matter like what fear or stress you feel, you have to always remember that you're just a man or a woman, you're a human competing against other humans. And at the end of the day, everybody is powerless. I mean? God is truly in control. And so you can pray to God to give you strength and give you courage. And I do that frequently, to take the burden, because at the end of the day, there's like 7-8 billion people. You might think you have problems, but there's 7 or 8 billion people that also have problems. And your problems may not be as big as you think they are, and you're very small in the grand scheme. You know what I mean? And so you just have to remember, your God is truly in control. And if you're intimidated by another individual or feel pressured or stressed, they're just a human. You know what I mean? So you can pray to God to give you strength and courage and go attack. And that's kind of what I do, is like, and because I face a lot of challenges because I'm younger, right? And so people don't take me seriously. So you constantly feel like you have to earn respect from people, whether it's lenders, investors, brokers, whomever, you know what I mean? And so you kind of have to have that mentality where you want to stay humble, but it's like, I kind of feel like, okay, well, if you want to cross me, that's fine. But I feel emotionally and mentally battle tested, you know what I mean? And so I can always go back to those times and remember, that if I just do what I'm supposed to do, the rest will take care of itself, and God will kind of take care of that. So that's kind of, what I went through in that time, and how we can apply it, now.
Great perspective. Great perspective. And yeah, I agree. I was 26 years old calling brokers, telling them I want to buy apartment complexes, and they'd let me buy them dinner. I think just to let me buy them dinner.
Oh yeah, get a free dinner.
Yeah.
Zach, I want to ask you a few real estate questions before we let you get out of here, man. This has been a fabulous, freaking fantastic episode, dude. Thanks for being so vulnerable and sharing those things. I totally agree with. The bigger you get, not like the fears go away, because you're only pushing the ball, and that I understand that perspective. What is setting you guys apart as a syndication company, both on the deal side and on the investor side? That allows you guys to win deals, that allows you to win investors. Maybe speak to both of that. Really, what sets you apart from as a syndication company in terms of capital and operations?
Yeah, no, great question, Alice. So I think one of our big advantage, frankly, is our relationships with the brokers. Okay, so the majority of our acquisitions have been sourced completely off market with no competition from anybody else, directly through these broker relationships. So that allows us to source the deal at a good basis that makes sense, without getting bid up in a competitive environment. And we are cranking the volume. Again, I know on the outside, it probably looks like we're just buying, everything. We lose at least 90, 95% of the deals we go after. And I'm touring multiple deals a week. Ikron is constantly underwriting multiple deals a week. And then our asset management team, Kaylee and Leslie, they're constantly shopping comps for these properties so we can make offers. So we're cranking the volume. We lose most of the deals, like I said. I mean, just in the past few weeks, we've submitted at least 12, 15 offers. Every single week we're submitting offers, and we're always staying in front of brokers. So that gives us a big advantage. And frankly, even the marketed deals that we've won, we typically have some type of unfair advantage. Okay. And what I mean by that is we know the broker really well, or we know the seller, and they've kind of told us where to be at the end. And it doesn't happen every time, but you can always get different advantages. And, what we do on the debt brokerage side, meaning like let's say you have a broker who works for ABC Brokerage on the investment sales side. Well, we always try to align with whoever the debt guy is on his team. Okay, because they have incentives. If you use the debt guy typically has to share part of his commission with the investment sales team. It's just how the industry goes. And we've had the debt guy tell us, hey, I heard offers came in. I think if you're around here, you can win it. And if it pencils in our model, then we've won deals that way too. So we kind of view ourselves as like the local scrappy underdog guys. Okay, because in Phoenix, it's such a competitive market. The majority of our competition is private equity, institutional capital, life insurance companies, and pension funds. So if you look at like a CoStar report, like top buyers the last couple of years, we're top 10. We're literally right there next to, Blackstone, Goldman Sachs, life insurance companies. And the difference is the brokers know if I go out and tour a deal and make an offer, they're talking to the decision maker, and we're not going to retrade them. We're going to do it. With these other big companies, they might be massive international companies, but they're talking to an acquisitions employee. And no matter what that guy says, ultimately the equity decision maker has to fly out and see the deal, and they can always blow it up. So with us, we jump on deals very quickly. You send us a deal within 24, 48 hours, we'll fully shop all the comps, underwrite the entire deal, get you in an offer going non-refundable day one. Okay. And we'll feel confident we can perform. And that's another part of it too, Ellis, is our terms. Bikram, Robert, and I, we front our own personal cash for earnest money, and we can be much more aggressive than these big institutional companies that have, corporate stakeholders. For example, we've gone $1 million non-refundable day one with no inspections on several deals now. And we now release it to the seller. So that means I sign a PSA, we wire $1 million to escrow releases the $1 million to the seller to go do whatever they want with it. And then once we close, it gets credited back. And we can do that because it's our own personal cash. And we've built in a very heavy CapEx contingency budget into our model, assuming all the roofs are shot, plumbing is shot, electrical shot, and that we can replace all of that in a doomsday scenario if we needed to, so that we feel confident going non-refundable before inspections. And we've won several deals just because of that alone. 95 to 100% of the time after we go through our inspections, we're trimming back that CapEx budget because it wasn't as bad as we had assumed in there. But we're winning deals by, sourcing with brokers, acting quickly with our terms. And then operationally, like you asked, Ellis, I think the fact that we're local and we have a full asset management team in place is huge. Okay. So, we have like over 3,100 units right now. We've sold some deals. We can get to any of our properties within 20 to 30 minutes. Okay. So our staff is literally touching every single property multiple times a week. And I'm not talking about the property management company because they're obviously always on site, which is our staff, but I'm talking about the asset management team is always on site. In addition to doing property management in-house, we also do all of our own construction management in-house, which is probably even more important. If somebody's listening and you don't have a portfolio big enough to support your own property management company, the big differentiating factor is to take all the construction management in-house. And what do I mean by that? It doesn't mean you have to employ the skilled labor, but it means you have to have some employees. For example, our director of asset management, Kaylee, our construction manager, John, and their respective staffs that they have beneath them that we've hired. We personally source, bid out, and manage all of our own vendors. So all of the roofers, plumbers, electricians, construction crews, we're bidding these guys out and managing them daily on site with our staff. So John, our construction manager, for example, he literally spends 40 plus hours a week just walking units that are undergoing renovations, making sure they're staying on schedule and on budget. And then on top of that, in addition, we personally source and purchase all of our own materials directly wholesale through a warehouse. So all of our flooring, countertops, appliances, cabinets, everything, we buy it all directly wholesale. We have it drop shipped to our properties on our schedule. Then we require that all of our construction crews use our materials so that we truly control the supply chain and they can't, increase cost on us and blame it on inflation or anything like that. So that's given us a lot of efficiencies and control. And we did not have any inflation or supply chain issues in all of 2021. And we renovated and leased up and moved in over 280 plus units across the portfolio. Every single unit met or exceeded our projected rent, and we met our construction budget on every single unit. And it's because we're controlling property management, construction management, and then we're controlling the supplies, the material. So that's kind of been our distinct advantage, where I think we're renovating units faster and to a higher scope than most of our competition, if not all of them in this market. And again, it's not our skilled labor, but we have, in 2021, we bid out over 40 different construction companies. We have 8 to 9 that are solid that we can rely on. Each company has multiple crews. So we feed these guys, somewhat evenly on different assets, and they're giving us discounts on labor because we're giving them consistent work. You know what I mean? So we have that volume now where we can do that. And then we've been blowing through our renovations so quickly. We're renovating 30 to 50% of a property in the first 3 to 6 months. And then we move on to the next property that we just bought. We just took over and moved those crews over. So that's kind of give you some insight on what we've been doing.
Guys, masterclass today. What I'm hearing too, for those who are listening, maybe just trying to get started too, is you got to just stay in long enough. I mean, the fact that you have these advantages, you can never have these advantages when you get started. And so it builds, it compounds. Zach, I'm pulling for you, man. Like, honestly, I love hearing your success. I hope literally at 10X's in 2022. Clearly, man, God has made you prime for this season. And you're the right man for a true leader, a true man of God. Love your faith, dude. And really excited to see what you guys accomplish at Rise 48 in 2022, man. Tell our folks where to go. Rise48.com, but that specifically anything there, but also where to follow you.
Yeah, no, thanks so much, Cameron. Really appreciate it, man. Yeah, you can go to our website, rise48equity.com. So RISE48equity.com. And you can set up a call, through Calendly. I know you guys have Calendly links as well. You can email me, Zach@rise48equity.com, and always happy to chat with anybody.
Real quick, what does that mean? Rise 48.
Oh yeah, good question. So funny story. We were initially Summit Equity. We started buying deals, and then we got a cease and desist letter from another Summit Equity that had a federal trademark, and they said, you better change your name, otherwise we're going to sue you. And we had no choice. And so we were trying to think of a name, and we liked Rise, but we had to make it unique somewhat so that we could get a federal trademark. And we engaged an attorney, a trademark attorney. And so we added the 48 because Arizona is the 48 state, like state 48. And it's kind of a thing around here. There's like restaurants and stuff. So we just did Rise 48 because we're Arizona based. And so that's what allowed us to get the trademark. That's the true story.
Love it. Ellis knows a thing or two about that.
Yeah. It's also, Kingdom, when we were Kingdom Capitalists, we had to change the name. I got hit with a trademark, dude. You learn as you go. I didn't even know you're probably the same way. I didn't know you should check for a trademark.
I had no idea. Yeah, exactly. Yeah.
You know what I'm saying? I love this, man. Zach, bro, I'm so pumped for you. Thanks so much for joining the Kingdom RI podcast. Guys, if you enjoyed this show as much as I did, please go share this. Go share Zach's story. This is what we need, more kingdom leaders that are absolutely crushing it in business and being an influence, like 90 people that he gets to minister to take care of, providing health insurance for 90 families. That's a blessing to the city, man. That's a blessing to the city because his business is prospering. And so help us share this, help us share that story by sharing this episode and leaving us a written 5-star review. Thanks, everyone. We'll see you next week.